Ever wondered why FGD ETFs are seen as a good choice for long-term investing? Well, let's take a step back and understand the basics. ETF stands for Exchange Traded Fund. Picture it as a basket of different securities like stocks, bonds, or commodities that you can buy or sell through a brokerage firm on a stock exchange. ETFs are designed to track the performance of a specific index, sector, commodity, or asset class. They're a bit like a chameleon, blending the characteristics of mutual funds and individual stocks. Now, what about FGD ETFs, you ask? FGD is a specific type of ETF that focuses on the financial sector. It's based on the First Trust Dow Jones Global Select Dividend Index, hence the abbreviation FGD. This ETF aims to replicate the performance of the index, giving investors exposure to a broad range of high dividend yielding companies from around the world. What sets FGD ETFs apart? Well, for starters, they offer a diversified portfolio. Instead of putting all your eggs in one basket, you're spreading your investments across numerous sectors and geographic regions. This strategy can help mitigate risks and create a more balanced portfolio. Another advantage of FGD ETFs is their potential for income. Because they focus on high dividend yielding companies, they can provide a steady stream of income in addition to capital appreciation. This dual benefit makes them particularly appealing for long-term investors. Lastly, FGD ETFs are easy to trade. Like stocks, they can be bought and sold throughout the trading day at market prices. This flexibility, combined with their transparency, as their holdings are disclosed daily, make them a popular choice among investors. So if you're looking to invest in the long run, FGD ETFs may just be the ticket for you. Remember to comment your experiences or opinions below, and subscribe for more investing insights. Now that we understand what FGD ETFs are, let's delve into how they work. Firstly, FGD ETFs, which stands for First Trust Dow Jones Global Select Dividend Index Fund, operate like any other exchange-traded funds. They are investment funds traded on stock exchanges, much like individual stocks. The beauty of FGD ETFs is their ability to provide investors with exposure to global dividend-paying companies, without the need to purchase each individual stock. When you buy an FGD ETF, you're effectively buying a slice of the entire portfolio that the fund represents. This portfolio is managed by a team of professionals who ensure the fund's holdings align with its stated investment objectives. So how do you go about buying and selling FGD ETFs, just like you would with any other stock? You can buy or sell FGD ETFs during market hours through your brokerage account. The price of the ETF fluctuates throughout the day based on supply and demand, just like any other publicly traded security. Now let's talk about how FGD ETFs are managed. These funds operate on a passive management strategy. This means that instead of a team of analysts constantly buying and selling stocks within the fund, the FGD ETF simply tracks an index. In this case, the Dow Jones Global Select Dividend Index. This approach helps keep costs low, which is a key benefit of ETFs. But don't be fooled by the term passive. This doesn't mean the fund is simply left to its own devices. There is still a team of professionals ensuring the fund is accurately tracking its index and managing things like dividend payments and reinvestments. In conclusion, the mechanics of FGD ETFs involve buying a piece of a diversified portfolio, trading like a regular stock, and being passively managed to track a global dividend index. This combination of factors can make FGD ETFs an attractive option for investors looking for global exposure and income generation. Understanding how FGD ETFs work is key to making informed investment decisions. Don't forget to comment, subscribe, and watch to the end to avoid making mistakes in your ETF decisions. But what makes FGD ETFs a good choice for long-term investing? Well, the answer lies in their stability, potential for growth, and suitability for diversification. Let's delve into these aspects one by one. Firstly, stability. FGD ETFs, or First Trust Dow Jones Global Select Dividend Index Fund, is an exchange-traded fund that aims to replicate the price and yield performance of the Dow Jones Global Select Dividend Index. This index includes 100 of the world's leading dividend-paying companies, providing a broad exposure to different industries and sectors. This diversification helps in reducing the impact of any one company's performance on the overall fund, thereby offering a level of stability that is often sought by long-term investors. Next, the potential for growth. FGD ETFs focus on dividend-paying companies. These companies are typically well-established, with a history of generating consistent profits. They are able to share a portion of these profits with investors in the form of dividends. Over time, these dividends can compound and lead to significant growth. This is especially true for long-term investors who have the patience to let their investments grow. Finally, the suitability for diversification. Diversification is a key strategy in investing, as it helps to spread risk across different types of investments. FGD ETFs offer a convenient way to achieve this. By investing in one FGD ETF, you gain exposure to 100 different companies from various sectors and regions. This can help to balance out the ups and downs of your overall investment portfolio. In essence, FGD ETFs bring together the benefits of stability, growth potential, and diversification. These qualities make them a compelling choice for those looking to invest for the long haul. As with any investment, it's important to do your own research and consider your personal financial goals and risk tolerance. FGD ETFs can offer a solid foundation for your long-term investment portfolio. Share your thoughts or experiences with these ETFs in the comments below and subscribe for more investment tips. Despite the benefits, it's important to consider the potential risks involved with FGD ETFs. Now, it's time to delve into the other side of the coin, the potential risks and considerations. Remember, every investment comes with its own set of risks, and FGD ETFs are no exception. Firstly, as with any investment, there's the risk of market fluctuations. The value of an FGD ETF can go up and down in response to the performance of the underlying index. If the companies within the index perform poorly, your investment could decrease in value. Secondly, there's the risk of currency fluctuations. FGD ETFs often invest in companies from various countries, meaning they're exposed to different currencies. If a currency's value decreases significantly, it could negatively impact the overall performance of the ETF. Thirdly, some may argue that FGD ETFs lack flexibility. Unlike individual stocks where you can pick and choose, with an ETF, you're buying a basket of stocks. Therefore, if a few stocks within the ETF perform poorly, it could impact the entire ETF's performance. However, don't let these risks deter you. There are ways to mitigate them. Diversification is key. By spreading your investments across different ETFs, you can potentially reduce the impact of any one ETF performing poorly. It's also important to keep a long-term perspective. While there may be short-term fluctuations, the overall trend for many ETFs, including FGD, has been positive over the long term. Finally, always do your own research. Understand the companies within the ETF, their performance, and the potential impact of currency fluctuations. The more informed you are, the better your investment decisions will likely be. While FGD ETFs can be a great investment, it's important to understand the risks. Remember to share your opinions or experiences, subscribe, and watch to the end for a complete understanding. So, let's recap everything we've covered about FGD ETFs and long-term investing. We've taken a deep dive into the world of exchange-traded funds, focusing specifically on FGD ETFs. We've explored the mechanics of how they work, the benefits they offer to long-term investors, and some of the risks to consider. The beauty of FGD ETFs lies in the fact that they provide exposure to a broad range of companies in the consumer goods sector. With just one investment, you're able to diversify your portfolio across multiple companies, reducing your risk and potentially increasing your returns over the long term. We've also discussed the convenience of FGD ETFs. They're traded on stock exchanges just like individual stocks, which means you can buy and sell them throughout the trading day at market prices. This gives you the flexibility to respond to market changes in real time. Another point we touched on is the affordability of FGD ETFs. They're designed in such a way that they're accessible to all types of investors, whether you're just starting out or you're a seasoned investor. But remember, every investment comes with its own set of risks. While FGD ETFs offer diversification and convenience, they're not immune to market volatility. It's important to do your own research and understand the potential risks before making an investment decision. Finally, we've underscored the importance of having a long-term perspective when investing in FGD ETFs. The real value of these investments becomes apparent over time, so patience is key. So there you have it. FGD ETFs offer diversification, convenience, affordability, and the potential for solid returns over the long term. But as with any investment, they also come with risks that need to be carefully considered. Investing in FGD ETFs can be a smart move for long-term investors. Don't forget to comment your experiences or opinions and subscribe for more insightful investment discussion.